Hello and welcome into the KE Report. Shad and Corey here as your host, and we're talking today with our friend and colleague Nick Hodge. Nick Hodge is the co-owner of Digest Publishing. We'll put a link to that down below so you can follow along with his work. And he is the editor of Foundational Profits and Hodge Family Office. One of those focused more on the macro and one of those focused more on the micro and the resource space, which we'll get into those topics here today with Nick. It's always fun having you on, Nick. About once a month is our cadence just to check in. And since we've talked last, we talked about there being a reflationary trade and everything over the last couple episodes. And we sure have seen that in the general stock market, in the crypto verse, in the commodities, sans oil and gas, but everything else seems to be up. And we were talking about the Lego movie and the song Everything is Awesome. It seems like we're in that kind of a tone right now, Nick, where everything is awesome despite any kind of potential headwinds. It seems like they've all been shrugged off, and it seems like everything's a tailwind. So, what do you make of the market where, except for the U.S. dollar, almost everything is up and everything is awesome?
It's Shad, Corey, good to be with you. I love the reference to the Lego movie as I scroll through the screen. You nailed it. Everything is awesome except for bond yields and the dollar, which continue to go down and to the right. I guess I'll start with the big, beautiful bill and say that, the current president who came in riding a wave of, we're going to cut government spending and deficits and debt, turned around and did exactly what I was telling subscribers he was going to do, right? I mean, he passed a big, beautiful bill that's going to run up the debt by trillions of dollars. And we could probably just stop there because at the end of the day, this destruction of the dollar and the federal government's very real need to inflate away the debt is, what's propelling this market higher. If you were to look at one thing in macro, to try to get a handle on what everything else is doing, it would be the dollar, as you just called out. And the dollar has been down and to the right with the DXY now below even 98 or something like that, right? So when dollars are going down and to the right, because every president of this century has run up the M2 money supply, then things that are priced in those dollars cost more dollars. It's not really that hard to understand in the broad sense of things, and that's why you're getting a rip in tech stocks and the S&P back at all-time highs and a gold back over 3,400, silver at 40, copper approaching 6, PGMs ripping, Bitcoin at 120,000 on down the line, right? And so yeah, everything is awesome as long as you're just staring at your screen, but don't go downtown or to the Middle East or look at the debt numbers. So in that sense, it continues to be a game of, I guess, musical chairs, right? And everyone wants to know when the music is going to stop. I used to be wondering that for a while as well, but as I mature and as I've been in the markets now for going on 20 years, and I've been telling my partner Gerardo this as well, it's like that can always gets kicked, man. And so don't fight it, I guess, all the old truisms, the trend is your friend, et cetera, et cetera. In terms of specifics on the macro front, you're going to get Q2 GDP for the US next week. It's going to be 1.5 to 2%. That's another reason that things have been going up. That's a fast rate of change to the positive side from the negative growth that we saw in Q1. And then it remains to be seen sort of what's going to happen in Q3 and Q4. Likely a tiny bit of a slowdown in growth in Q3 and then an acceleration into Q4 and into 2026. So inflation is the wild card here. I mean, it ticked back up in June from sort of 2.3% on a monthly basis to 2.67% in June. Flip a coin for July and August, right? And so as I told you last month, I'm looking for a bit of volatility here in later July and August as President Trump and Jerome are fighting. We don't really know which direction we're going to get on rates. We've got earnings season kicking off here with some tariff consternation in the auto stocks and then things like that. So the next couple of months are going to be interesting, but on the whole, I think you've got a bullish stock market. I think you've got a very bullish commodity market, and I think you've got bearish yields and dollars. So that's a pretty good summation of what's going on out there.
So just focusing on the commodities markets here, Nick, I've been saying that this is the best market I've seen in well over a decade. And I know we can go back to some other times when stocks, especially precious metals stocks, or let's say uranium stocks, what have you, ran for short periods of time. But this has been going for over a year now, where the majors led the way, money trickled down into the other stocks. And recently, we've seen the juniors revalued. I've noticed juniors without any news that need to raise money, their stocks have gone double, maybe some even triple too. When have you seen this sort of environment where people are interested, stocks are going up, even on the back of no news, and even financings are being oversubscribed much more than the company even thought? And then when they're closed, the share price continues to move higher.
Yeah, I mean, I haven't seen a market like this since coming out of the COVID panic in 2020, when I would remind everybody Trump wanted his names on the checks that kicked off this whole inflationary environment. But I digress. But it's sort of a good comparison, right? Because I just mentioned the big beautiful bill, sort of analogous to the stimulus and running up the money supply. And we saw this in 2020, right? I remember gold running hard, putting out gold promos for newsletters that were selling very well. The advent of, that's when Wall Street Bets was formed, and by extension, Wall Street Silver, which is still around, and they've been calling for the moon for the past half decade. But that's the last time I've seen a market this frothy, and I think frothy is the right word. I mean, you got the meme stocks coming back now. I've been reading about Kohl's and Krispy Kreme donuts, and I'm sure Hycroft is going to start catching a bid here. That's how that seems to go. And then before that, I mean, you had a little mini run in 2016, and then of course the big cycle before that was sort of coming out of the GFC, the global financial crisis, when gold and silver went to records in the 2010, 2011, 2012 timeframe. But that really predates my heavy involvement in the sector. So what I know about that and previous cycles, whether it's stuff in the 90s or in the 70s heading into the 80s. All that stuff comes from a history book for me. I wasn't around. And so in terms of the financings and the juniors, which was the second half of what you were talking about there, personally, I've never seen it like this. Like I've exercised multiple warrants in the past couple of weeks. I was just filling out paperwork for my broker this morning, exercising warrants in a gold junior. So and have many more warrants that are in the money is probably a good way to look at it. I keep a warrant portfolio with a price that they're exercisable at. And when I scroll down that portfolio, it used to be they were all out of the money, right? They were all red. And then over the past couple of months, I scroll down my warrant list and they're very much in the money, except for a couple of them. So there's been a paradigm shift. I think there's been a realization. Last month, I was getting philosophical with you, telling you that we were on the precipice of a change in humanity, right? With AI and nuclear and how we were going to fuel all that. And I think that continues to gain steam. I won't get too philosophical or esoteric on you, but I read a lot about generational turnings. I think we're heading into the biggest part of what's called the fourth turning is as the millennials come of age. I think they realize some of the problems that are in the world and what needs to be done about it, and not just in the energy and in commodity space as it relates to clean energy and powering the grid and powering AI, but also seeing through the nonsense from governments and government or quasi-government entities, i.e., what you're seeing with the Epstein case and then the federal government, or how people are barking at the Fed and the remodeling of their building that's up to $1 billion. That might be grasping for straws to some of your readers, but for me, it's all connected, right? Like there's this shift into real and harder assets and real solutions. And for me, you can't have real solutions in this world without real assets and real building blocks, and the things that we invest in the commodity space and the resource space and the junior resource space are those building blocks, right? Whether it's real money in the form of silver and gold, or whether it's the rare earths that all of a sudden the world is realizing that they can't have their doom scrolling devices without, sort of pick your flavor. I think there's just this massive global realization going on. And I expect that to continue. Call it a super cycle, call it whatever you want. But I think it's still early days, and you can look at different indicators to reflect that, right? Whether it's weird ones like gold copper ratios, or even like just look at uranium, like $70 still isn't enough to overcome the supply deficit that's expected over the next 5 to 10 years. So I don't know if that answered your question at all. I think the question was, when's the last time you saw a market like this? So, I mean, 2020 for me, and then obviously, 2010, 2011 before that. Is that sort of what you were asking?
That's exactly what I was asking. And quite frankly, that lines up to what I saw. 2020 was very short, but that 2010 period where it ran a bit longer and everything got going, that really feels like we're in right now.
Yeah, for sure. And I've heard people that, went through those cycles reflect the same thing. I do a lot of business, and Jeff Phillips has been a mentor of mine over the years. He believes we're on the cusp of a new cycle. I've been talking to Rick Rule more and more. I interviewed him ahead of his Focus show the other week, and we did a private placement together in a small copper company a couple of weeks ago. He says the same. He talks a lot about Africa and the billion people that still don't have access to cheap energy and that sort of transformation. So yeah, I think that folks see big things going on.
Well, I was involved in the sector back in 2010 and 2011. Remember it vividly because it was really my foray into the mining sector. I had been stacking silver in 2008 and 2009 during the great financial crisis. I was a financial planner at the time. Maybe I've never told you this, Nick, but people were coming into our office every day and we would look at their portfolios going down and they were grasping for anything that was real. And that's when really gold and silver took off in a big way in 2009 through 2011 was that whole cycle. But at the same time, uranium was taking off. That was the initial nuclear renaissance, and it was interrupted by the Fukushima disaster in
Fukushima.
2011.
Yeah.
But then there was also rare earths going, and that was the first time I'd invested in rare earth companies back in 2010 through 2012. So there are a lot of analogies and analogs to that period, and it was people looking for hard assets, as you just described, Nick, the building blocks of everything. I want to get into gold and silver, but since you brought up rare earths and since we just mentioned it twice, we probably should mention that what's different, I think, about this cycle is the actual realization that in 2020, the supply chain became on first and foremost in people's mental picture, and they started realizing how delicate these supply chains are. And now China's doing export bans again of a lot of minerals. That's the exact same playbook they were doing back in 2010, 2011, and 2012. Only this time it looks like it has more staying power. So we've seen a lot of news developments in the rare earth space just recently, and we talked a little bit about this. You had mentioned that this was something that was on your radar screen too. So let's talk briefly rare earths.
Yeah, I would love to. So I've been pounding the table on this for a couple of months now, even before the official Chinese banning of concentrates and magnets came out, which has been walked back a bit, but the worms have crawled out of the cup, as they say. So I mean, we don't need to go through the whole rare earths thing, right? This is a group of more than a dozen elements. There's heavy rare earths, there's light rare earths. The U.S. doesn't produce a lot of them. There's sort of one main company, MP Materials, and they're primarily on the light side, like the neodymium and the dysprosium side, and DPR, which is the common one that people know. But the heavy rare earths are sort of much more important for tech and military applications, like the terbium and the dysprosium, yttrium, for example. And the U.S. doesn't really produce a lot of them, even MP Materials. And so I don't know how many people you've had on to talk about rare earths, but there's been a number of big deals announced in the past month since we last spoke. So the Pentagon or the DoD came in and invested $400 million into MP Materials, gave them a $150 million loan, and also gave them a price floor for the NdPr, something like $110 a kilogram, if memory serves. And that's a higher price than sort of neodymium is trading now. I think it's around 80 or $85 a kilogram. So they're giving them a price floor in case China decides to flood the market at some point. The other thing that happened with MP Materials again is Apple came in for a $500 million deal, $500 million on the heavier side of things to invest in facilities that MP Materials is doing in Texas to recycle the heavier rare earths that I was just mentioning. And so in the past month or two, MP Materials has gone from a 20 some dollar stock to a 60 some dollar stock. Whip out your calculator and that'll tell you it's a 200% increase in just a couple of months. And it's a sector that I know a little bit about. I mentioned Jeff Phillips. He financed several of the rare earth companies in that initial boom you mentioned, 2010, 2011. He was behind companies like Questware Elements, Rare Earth Elements, Flinders, deals like that, some of which ended up getting listed on the big board and really ran. So he's taught me a bit about the sector, and I've made a few investments. So one I've been telling you about is called Kotech Holdings. I financed that company last year at 45 cents a share, and it just crossed over $1 here in the past week. And they too are going to be recycling rare earth magnets in Texas, the same as that MP Materials deal that was announced with Apple, and on sort of a similar timeline. Kotech's already got a pre-feasibility study. They expect to be in production by 2017, and the same technology is already being used in Europe to produce rare earth magnets from recycled hard drives. So the technology is real. It's not a black box. And I think word is getting out, which is why those shares have doubled from 45 cents last year to over $1 today. And they just raised $8 or $9 million to really get the final planning and long lead time equipment orders done for that rare earth recycling facility in Texas. The other one, and I know Shad, you know about this company, is Energy Fuels, who is already producing, albeit in pilot scale or bench scale quantities, but they're already producing heavy rare earths. They've signed deals to import monazite sands from Madagascar and also from Australia, a project called the Donald Project. And so, press releases that Energy Fuels is putting out saying that they could provide something like 34% of US demand for dysprosium and 23% of terbium in the next couple of years here. So I don't have a chart in front of me of Energy Fuels. I guess I could pull one up, but that stock has been doing well as well. It's up to 934, right, at 52-week highs, and that's coming off $3 just in April. So that stock has tripled as well. And back to my previous point about those realizations and the building blocks, now I open up the Wall Street Journal, I open up the New York Times, they're writing about, gangs in Myanmar and China crossing the border to really secure these rare earths. And it's like, wait, you guys didn't care about this a year ago. I'm loving all the attention that this rare earth sector is getting. And it's also very small. Like there's not a lot of quality deals. You can look at a couple of things that are coming on in clays in Brazil that might have some bite to them. But, there's other stuff that just runs and that is happening in other sectors, right? Like I'm thinking of that asset in Nebraska that comes around every time there's rare earths in the headlines, for example. And so that's about it, I guess. It's fun to watch. Have liked seeing my Kotech and my Energy Fuels double and triple and more, and just keep a cautious eye out there because this is when, as happens in the resource space, companies that were cannabis companies, that were blockchain companies, will soon be rare earth companies, and so that's always a fun little thing to watch.
You know it. Watch out for that. All kinds of new entrants. But one thing about that MP Materials deal and that sector broadly, the rare earth sector broadly, is that the government is really getting behind it. The DoD getting behind it, setting up that funding package of some big institutions in the US. How important is this? And more importantly, how sustainable do you think it is that the government truly is supportive of the resource sector, even if it is just rare earths right now?
Yeah, I mean, as a libertarian, I could entertain an argument that I don't want the government doing that. As an investor and as someone who looks at my bottom line, I see what it's done for the companies. And so how sustainable is it? I sort of said they've kicked the debt can down the road for as long as I've been in this business, 2 decades. So it seems pretty sustainable. They're the ones that print the friggin' money, as I outlined earlier. And they've been doing it in other sectors, even back to and they agree on this is a more important thing. Like, Biden passed the Inflation Reduction Act, and Trump is largely following through on that. A couple of years ago, we were talking about the government funding and backing lithium projects in Nevada. Now we're talking about rare earths, but it's really much beyond that. I mean, this administration has put out executive orders on critical elements in general, right? I mean, they're supporting nuclear, they're supporting fuel enrichment, uranium development, they're fast tracking permitting on uranium mines. The Commerce Department investigating copper under a Section 232 petition, sort of like they did with uranium back in the 2018-2019 time frame. You're seeing movement on the permitting of big assets like Resolution, for example, in Arizona. And so I think this underpinning of support is very real. And I think that the government is realizing that they backed themselves into a really tough spot by outsourcing, all this production and the related emissions to other countries. At the same time, I'm not sure how well thought out it is. Like, Trump is erratic. He's all over the place. He fires off tweets and shoots off his mouth. And you never know what is really substantive and what's going to become real policy. And if he's been advised that it is good policy, like he was talking about copper import tariffs the other week, and copper shot over $5. There was a lot of people, including myself, scratching their heads saying, well, where is the copper going to come from, right? Like you can produce a bit here in the US, but I'm pretty sure we don't have like the smelting capacity and things like that. And oh, by the way, doesn't $5 or $6 copper increase the input price to American projects, construction projects, infrastructure projects? So, all that remains to be seen. Likely one of the reasons that inflation will remain sticky high above 2% for many quarters to come. But I think it's real. I think it's sustainable. And just anecdotally, like I see large publishing houses, hanging their hats on this, producing sales videos and things like that on this theme because they too are convinced that it's going to be sustainable for years to come, and they think they can sell newsletters and they think people can make money by investing in it. And so, I mean, I think that's sort of it. I mean, it's real and it's here and it's happening now.
Yeah, it's a great point, Nick. And I think that this is a little different in that we've seen subsidies of agriculture for a long time and even subsidies of other businesses. Think back to solar, think back to different
Ethanol,
factors.
sure.
And I agree with you from a libertarian standpoint. You don't want to see the government interfering, but as an investor in resource stocks, it's nice to see a little help and a little bit of support for the mining sector. Literally just yesterday, the Department of Defense also gave out money to a tungsten project, Guardian Metals, that's operating in the U.S. And there's another tungsten company we just talked to that thinks they're in line to get one as well as some other critical minerals. So the critical minerals are still getting some government support. But you tapped into copper there and the need for more copper. And yeah, I wanted to get with you because since we've talked last, Trump did come out and say, hey, we're thinking about a 50% tariff. Now they're talking maybe 40%. What does that do to the automotive industry? Like you say, what does that do to the housing industry? What does it do to really a lot of different things, especially if you want to still continue to build out electric charging stations for EVs and crypto mining? There's a lot of industries that need the copper. AI data centers is the thing that people have been obsessing over for the last 2 years. How are we going to build these AI data centers if the cost of copper is going up? So what's the investment angle that you see right now in copper domestically and internationally?
Yeah, I mean, domestically, it's sort of easy. Freeport is the largest North American producer of copper. I've been talking to you guys about that. It was $40, I think, last time we talked. It's $45, $46 stock now. Pays a healthy dividend. So, that's the way I play it domestically. I dabble in other sort of mid-tier copper companies that are well operated, companies like Arrow Copper, for example. I've owned and not owned Amerigo Resources over the years. But I'll just talk my own book for a second because I haven't done that many private placements this year. I think I've only done one in the past 2 months or so, and it wasn't a copper company, and it's worth talking about because Rick Rule was the lead financier on it. Jeff Phillips, who I've already mentioned, came in and were willing to lock up their paper for 12 months, which is rare with these financings. And so that alone tells you that they think this copper bull and this copper run has legs beyond the past 4 months and a day. And it was in a little company called Kincora Copper, which is in the Macquarie Arc in Australia, and they employ the prospect generator model. So this is an area that was sort of new to me. I had to brush up on it and do some research, but it turns out it's really one of the main reasons that Newmont acquired Newcrest. There's some big copper gold porphyry mines that are operating there. And it's come on as a really new forefront of the copper exploration space. And so this little company, Kincora, has over $100 million in partner funding commitments from big companies like Anglo. And actually, this is super interesting. And two of the properties that they've JV'd out are to tech companies. We're talking about AI and things like that. One of the companies is called Fleet Space. They use these ambient noise sensors to prioritize drill targets without having to do a lot of field work. And those sensors are linked in real time to satellites so the geoscientists can get the data from wherever they are in the world and then analyze it. And one of the other properties is JV'd out to a company called Earth AI. So you got these tech companies coming in a real way, and we'll see what happens. They've got drilling across multiple projects with multiple of those partners, and it should be an exciting time for Kincora and copper in general. But while I was talking there, I thought of something that I wanted to get out, and not just as it relates to copper, but other commodities, and even the last discussion we were having in terms of the government funding, right? So you've just seen Apple come in to MP Materials over the past year. We've seen all these tech companies sign power agreements, nuclear generation agreements, small modular reactor agreements. I expect to see that in other commodities as well. When you've got these tech companies with trillion, 2 trillion, 3 trillion market caps, right? And they've already shown their willingness to go into the energy contracting space. And I just explained to you that this tiny little copper company has AI companies and satellite companies already coming into JV projects. Yeah, I think that is more of the path forward as well. Even going back to my answer about building blocks, right? Like, there's been this malaise for so long and this underinvestment in the siloed resource space for so long, and unwillingness of majors to invest in replenishing the reserves, et cetera, that I think one of the catalysts for this expanding and sustainable market is these tech companies coming in and securing their supply because, well, just because, right? Like, if you need to build a data center and you're a trillion-dollar tech company, why wouldn't you take a portion of your balance sheet to secure not only the nuclear energy you needed, but the uranium as well? And so I would expect more of these tech companies who need these assets coming in and migrating down the food chain into the junior space. And that ticks off a lot of boxes for a lot of questions that we've all been asking over the past 5, 6 years, right? When does the tech bubble pop, and when does money come into the junior resource space? When do these retail investors start showing love to the resource space? When do these younger millennials and Gen Zers show love to the space instead of to crypto and to Tesla and to these, short dated call options and YOLO stuff, right? I think what I just laid out there sort of answers a lot of those questions, right? By osmosis and by inference. And by seeing what these big tech companies are doing, the trend then comes to the natural resource space by way of needing, which you and I, guys, have known for a long time, but these tech companies are now needing these resources and are coming in and are coming to us, as opposed to us wondering, when it was going to happen or what we have to do to get on the map. And that, Corey, and Chad as well, going back to your question about when have you seen a market like this, is something that's sort of different this time, right? And it could really give it the bull market I'm talking about, really give it some sustainability and some headline generating power.
Oh, it's huge. Having the potential of these tech companies with huge capital, with huge balance sheets coming into the sector, that's exactly what the sector has needed, that has been starved for capital. So, Nick, I guess overall, now is the time to be aggressive, right? I know people are always saying, are we close to a top? Oh, no, do I need to take some profits? I think it's always good to take profits and sometimes look for better opportunities out there. But quite frankly, when it's a bull market, you do need to embrace it's a bull market and go out there, be aggressive, and try to make money. So how has your strategy changed maybe in the last 6 months to year?
I need more time to think about that, but one is employing patience, right? So I had owned and do own a lot of these names and had been in the habit of taking smaller profits. One thing that's changed is I've been telling myself to be more patient, right? Let your winners run. Just be more patient. If we're truly in a bull market, you don't want to sell too soon. So that's one thing. The other thing has been warrants, which I sort of touched on already. I've exercised a couple of warrants that have come into the money in recent weeks, and that's something new that has changed, and thank goodness. And what that means for me is deciding what to sell. And I've probably given you this answer before, but there's sort of three ways to come up with capital to exercise warrants. You sell shares of the stock that you have the underlying warrants in, sort of trim some of your position and then exercise your warrants. You can sell another position that you're no longer infatuated with or no longer want in your portfolio, or you can inject new capital if you're so fortunate enough to have that new capital to inject. I found myself doing a bit of all three. So trimming those positions in the underlying companies that I want to exercise warrants, but not enough to cover. And then really just using it as a catalyst to thin out the rest of the portfolio that I don't want to ride this bull market in. And so I probably own fewer names now. And that's really the answer to your question as I talk through it is I concentrate on the ones that I think are going to have the highest returns. And I buy more of the ones that are winning and running. Let me just try to give you a quick example. So we financed a company called Bravo Mining at 64 cents a number of years ago, 3 or 4 years ago. It has a world-class PGM nickel gold deposit in Brazil. Rick Rule was in on the financing as well. It ran to over $5 like 2 years ago. And then in the resource softness of the past 2 years before this bull kicked off, it came all the way back down to $1.80 or two. Well, I took some profits off the table, sold some of my position when it was two, three, $4. And then when it was back down to $2 and below, re-added to that position and had continued to buy it. So had a chance to chat with that company at the Rule conference a couple of weeks ago. You know, they're at the PEA stage now, showing that this is truly a world-class project. If you could read between the lines, the chairman who owns over 50% of the company couldn't make the Rule conference. He was in serious meetings in China. And so again, read between the lines on, you know, why the CEO would be over there talking to Chinese companies. And then put that together with the run that we've seen in platinum and palladium. And all of a sudden, Bravo Mining shares are back closer to $4. And I've been buying them up in the past month here. So exercising warrants, thinning and winning, concentrating on what I think are going to be the biggest winners in the portfolio. That's how I've sort of changed strategies over the past couple of months as this thing gets going. And not trying to do too much, right? I think that's another good piece of advice, right? I see a lot of new deals now. Other stocks are moving that I don't own, which triggers our lizard brain into FOMO and chasing. You don't got to do some of that stuff if you know what you own and you were ahead of the game. And if you're not or you weren't, then you've got some catching up to do and some education to give yourself. And all the same advice applies. Buy the quality names. Don't overextend yourself. Don't own too many, right? I feel like people were asking me that question at the conference. Like, what's the biggest mistake you see people make? And it's you own too many positions, right? And then so not a single one of them, you know, doing really well, like moves the needle a ton for you, right? So concentrate a little bit more and do the best diligence you can. Shameless plug, subscribe to guys like me, Gerardo, and there's other good folks out there, right? Brian London, Brent Cook, and Joe Mazumdar. And you'll see the cream floats to the top, right? Like if you subscribe to 3 or 4 junior resource newsletter writers, you'll see some of the cream is in all of their portfolios because they end up selecting some of the best in breed stocks. And in that way, and now I'm really rambling on here, it's like a recipe, right? I've given this analogy before in my podcast. Like if I'm making something new, I normally look up 5 or 6 recipes for it that have 4 or 5 stars, and I take the best attributes of each. That's really good advice for someone new to the resource space coming into this bull market, right? Look at a couple of the better cooks in the space and see what ingredients they're using.
Man, that's a ton of great advice that you just rifled off there, Nick. So I hope people maybe take that, replay it, and go through that again. But I mean, some of the big takeaways: letting your renters run, pressing your bets in your high conviction plays, being willing to pull profits. But then when you have a high conviction play that pulls back, being willing to reload and ride it again and play the trends as they're playing out. Look for the cream rising to the top. And yeah, subscribe to people that know what they're doing. So for those of you listening in, if you want to get more information from Nick and his partner Gerardo, definitely click on the link below. It takes you over to Digest Publishing, and you can see their whole suite of offerings. Nick, it's great to have you on the show. The only thing we didn't actually get to was gold and silver, which are also ripping, but that ties into the everything's awesome theme, and so we'll get to that next time. But great having you on the show, and as always, looking forward to our next conversation.
Thanks, guys. Appreciate it.